What's going on, Dividend Chasers? It's the Dividend Bloodhound here with another investing episode. In this episode, we're going to talk about 3 UK FTSE 100 stocks that are approaching Dividend Aristocrat status. That is so important and so vital for us long-term dividend growth and dividend income investors, is it? These companies are really strong companies. If we look at the fundamentals, which we will do in a minute in the app, you can see that they've weathered this storm of this economic crisis and the pandemic really well, and have come out the other side of it and recovered back to either where they were beforehand share price wise or even higher than that already, and that is really testament to the strength of these companies. They do have slightly lower yields than you would typically expect and want, lower than average across the FTSE 100. However, what this is a really good, strong, almost all but guaranteed yield, where these companies have got an absolutely excellent history. One has got 20 years of dividend growth, consecutive years dividend growth. The other has got 20 years as well, and then the other is at 16 years, all maintained throughout the last financial crisis, throughout this crisis, have all been maintained. And yes, the yields at the moment might max out at 2% or 2.5%, but they are growing year on year, and that is really important for us growth investors. Now, I don't know about you, but I know the way my strategy works is I would rather own a company that has got such a really good history as to you can almost forget about it in terms of how it's going to perform. You know that it's going to do really well. You know it's going to keep raising its dividends, so your income's going to keep going up, and that yield on cost is going to keep going up. So why on earth would you not want to have these companies in your portfolio for the long term? Now, I know some people have got issues with how long it would take for that to happen, but with patience and time on your side, compounding can really take effect with these companies exceptionally well. Has to be said that you may pay a premium for these companies, which is inherently why their yields are so low at the moment, and you'll get to look at that in the when we have a look at the fundamentals. But you do get that with a lot of Dividend Aristocrats and a Dividend King. You pay the price of the premium stock that it is. It's a bit like buying a Mercedes-Benz over a Ford, for example. You sort of get what you pay for, and the quality that you get is exactly what that is. So that is quite important to remember when you see the cost of some of these shares and the yield being low. Just bear the history in mind and the premium that you're paying for. And we're going to get right into the app in a second now, and we're going to have a great look at these companies and see where they're at currently. That being said, if this video does bring you some value, that's absolutely brilliant. If you could let me know that by smashing the like button in the corner there, that'd be absolutely fantastic. And if you're brand new here and you've never seen me before and you've just discovered my channel, that is brilliant. That is exactly what I'm looking for. It'd be fantastic if you could subscribe to my channel in that corner there, and even tick that little notification bell as well, so you get notified again when I release brilliant content like this that hopefully brings you some really good value and helps you on your investing journey. That being said, let's roll the intro and get into the app. What's going on again, guys? Welcome into the app, and welcome to our first company, which is Spirex Sarco Engineering, a FTSE 100 UK based constituent. And this company is responsible for producing steam-based engineering solutions, audit, maintenance, repair, operations in the steam world, in the engineering world. You name it, they produce it, they look after it, they repair it, they maintain it for you in a whole multitude of countries across the world. And its ticker is SPX. It has a market cap of 7.25 billion, a PE ratio of 38.99, revenue of 124 billion, an EPS of £2.52, dividend yield of 1.12, net income of 166 million, and debt to assets nice and low at 51%. As you will see there, the yield is reasonably low at that at our moment in time. However, it is a growing yield. It has been growing for 20 years now. Their EPS growth over 3 and 5 years is double digits. Their revenue over 3 and 5 years has increased 12.87% 3 years and 17.94% over 5. And their dividend growth is double digits over 3 years at 13.12%, which is absolutely excellent growth over a 3-year period. And the reason the yield has remained so low is because the stock price has literally continued to climb and climb and climb. That is exactly what we like to see as investors, is a stock price that just keeps climbing over time. Of course, it goes up and down a little bit along the way, but look at where it is now. It's almost back to record highs. And yet in peak crisis it dropped down to 77, but then bounced straight back up. It's completed that V-shaped recovery a lot of investors were on about. So unfortunately, if you were to buy it at the moment, you would be buying at a record high, but rest assured you are buying a premium company. Look how quick it has recovered from the health crisis. If you bought in then, kudos to you. That was an absolutely excellent investment. Last time you could have got it for that price was October 2019, and even then you would have been extremely lucky to get hold of it then. It just keeps walking up and up the stairs. Absolutely fantastic company to own, and one that I'm looking for to add to my portfolio in the near term over on Freetrade. What's going on again, guys? That was our first stock, Spirax Sarco Engineering there. Our next company, I hope you enjoyed that, hope it brought you some value. Really strong looking company in terms of its fundamentals and its future, and of course its history. History is by no means an indicator of the future, but it does give a very nice look at where the company, the path the company has trodden, and that always gives a warm feeling to investors when you know just how well their history has gone. Our next company is Helmer, and again this is another really strong company with 20 years of dividend growth, approaching the Aristocrat status. And we will get back into the app and we will have a look at this company as well. Catch you back in there. What's going on again, guys? Welcome back into the analysis center and the app. And of course, as I've already mentioned, we are talking about Helmer company. This is a manufacturing product company that aims to improve the lives of people through safety in a growing industry. They have 4 sectors to do this. They work into process safety, infrastructure safety, medical and environment and analysis. They also work on hazard detection and much more as a very diverse company. Safety in the workplace is a growing industry, both here in the UK still, but across the world. Companies are really trying to get on board with safeguarding their workforce and safeguarding their employees, and it's all part of corporate social responsibility, looking after the people that actually work for the company and the environment that the company is in. And that going forward is getting more and more important as we look to safeguarding the environment for future generations. Anyway, let's have a look at some of the fundamentals to this company then. Obviously it's called Helmer, ticker HLMA, has a market cap of 8.64 billion, a PE ratio of 47, revenue of 1.21 billion, EPS of 0.48, a dividend yield of 0.71, net income of 162.8 million, and a low debt to assets ratio of 36%, which is really excellent news for the company to have such a low debt ratio. Now, looking at the dividend, as we all do naturally as dividend investors, you will have noticed that it's actually below 1%, and for a lot of people that will mean a massive no straight away, and kudos to you and fair enough if you're one of those people. However, I am not one of these people. I'm happy to have the dividend grow over time, just like MasterCard and Visa do. Their yields are remarkably low because the share price keeps climbing so quickly, but they do keep raising their dividend very well. And if we have a look here, we can see that the revenue of this company over both 3 and 5 years is still growing in double digits, which is absolutely excellent. Earning per share growth is also up almost double digits for both. And then we have the dividend growth over 3 years at 7%. Not quite the double digits that I would like, but still pretty good. And knowing that they've done this for the last 20 years, is an excellent feeling. And it's a better, lower risk place to put your money at the moment, which is what everybody else has done by the look of it in the stock market, which is what's caused the price to be a premium right now, which is a little bit unfortunate if you're buying right now because it's never been higher. But that is just something to consider. Either wait for a small pullback, because I don't think there'll be a major pullback or a major crash. I could be wrong, of course I could. We don't know what the market's going to do, but it's currently at record highs, so I'd wait a little bit. But as you've seen with the past of the company, it does continue to go up, and their revenue keeps going up and their dividend keeps growing. So I'd be happy to start a position here and see if I could average personally, and then see if I could average down over the long term, which is what it's all about for myself. I'll just wrap this one up here and I'll catch you back in the real world. What's going on again, guys? Welcome back to the real world. That was Helmer there. Another exceptional company, and that is what I'm trying to do, bring you as many exceptional companies as I can that are growing dividend payers and growing them really well. And I fully understand that their yields are quite low, but we have to remember as dividend investors and looking for passive income that it is not always about the upfront initial yield. It is about the growth and the long-term future and sustainability of the company. Now, our last company is called Intertek Group, and that has been growing its dividends consecutively for 16 years. So a premium history again, but not quite as long as the other two in this video. However, still long enough to put it straight on my radar, or under my nose, as I'm supposed to be the dividend bloodhound. I will catch you back in the app and we'll have another look and delve into this company. I'll catch you in there. What's going on again, guys? Welcome to the final stock and the final analysis of this episode, and we are with Intertek Group PLC, and they provide quality assurance based products across trade and resources through looking after the cargo inspection with cargo inspection, analytical assessment, calibration and related research. And then they have another sector in government and trade services where they provide service to governments and regulatory bodies to support trade activities. And then lastly, they have an agriculture business that provides analytical and testing products and services to the global agricultural community, just to give you a brief oversight there. What they do is absolutely exceptional, and they are particularly good at it. They have the ticker ITRK, a market cap of 8.75 billion, PE ratio of 26.76, revenue of 2.99 billion pounds, an EPS of £2 and 3p, a dividend yield of 1.97, net income of £313 million, and debt to assets ratio slightly higher than the other two at 66%. Now, if we have a look, as with all of them, as with the other two companies, the yield is below 3%, which is usually where a lot of investors draw the line. However, not me in this case. And as we can see here, the company's growth has been pretty decent over the last 3 and 5 years in terms of revenue growth, 7 and 5% respectively. You'd like that to be double digits, but at least it is growth, and at least it's not just 1% growth. And they got earnings per share growth of 12% in the last 3 years, which is good. That means they're more efficient, and 7% over the 5, which is also pretty good. and then their dividend growth over 3 years is a whopping 19.24%. That is absolutely enormous, and that is fantastic for us dividend investors and what you want to see going forward, which again puts this company well and truly on my watch list, on my radar to add to my portfolio. Again, we're paying a bit of a premium, as I've already mentioned before, with these other stocks. They've largely recovered already from the health crisis crash. So at the moment, a share will cost you £54.36. Peak crisis, you could have bought it in at 41, which would have been the absolute bargain of the year. And then it's peaked this year also at £60. So there's still £6 in it per share for you to make potentially as this company grows back to normal. You can see here the history is a little bit less upward trending than the other two. It decreases back in 2015 and then continues to climb, and then comes down a little bit here in 2018, peaks again up at £60 and then drops back down, and then obviously we're up towards the present day. So it seems that the peak price for this company is £60 at the moment, and I would stand by for it to raise back to that in the next 6 to 18 months or so. Really good company, really good fundamentals. Shame about paying a premium up front for it, but again, as I said with the others, I'm happy to pay a premium for the first one share and then try and average it down from there, or if it doesn't and it appreciates, so be it. We'll just dollar cost average it either way. That being said, that wraps us up for this stock, and I'll see you back outside in the real world. See you in a minute. Hello again, guys, welcome back to the outside world. Yet another fantastic company there. Hope you enjoyed that one, and some of these are useful towards your portfolio, or at least are worth a look. That'd make my day if that was the case, and it's just something for you guys to look at. Obviously, you don't have to invest in anything that I say because I'm not a financial advisor, but I do like to think that I can sniff out a few decent companies here and there along the way, and of course share it with you guys. You will pay a premium for these companies, as I've already mentioned, and they do seem to have a low yield right now, but you just have to be patient. That's all it is what I would say, is just dedicating some time to these companies, taking your time and just letting them grow on their own and grow their dividends accordingly. Don't expect the earth to come from these companies straight away. You're not going to get quarterly big payments or anything like that, but what they will do is keep raising their dividends like a staircase year on year. And if you look back at the history, if that's anything to go by, obviously past performance isn't an indication of future performance, but if the history is anything to go by, you'll be sitting on appreciation returns, dividend growth returns, all wrapped up in one pretty little package for you. And that is absolutely fantastic for the sort of investors that we are here. All that remains is for me to say thank you very much for watching this video. I hope it has brought you some value, and if that's the case, please hit that like button in the corner there to let YouTube and the algorithm know that I'm doing a good job, and then me personally, that'd be absolutely fantastic. If you're brand new here, it'd be super awesome if you could hit the subscribe button, and then the cherry on the top would be hitting that notification bell so you get notified of when I release new companies, new stocks, portfolio updates just like this one, and you get told about it straight away so you can tune in and see the Dividend Bloodhound in action. I hope you've enjoyed the video. It's been an absolute pleasure to make, create and edit, and I'm looking forward to seeing you in my next episode, and I hope you are looking forward to it as well. Catch you soon. Goodbye.